Okay, so picture this. You're all happily retired, enjoying those golden years, and then suddenly, bam, you need help with, like, everyday things. Getting dressed or making meals or just getting around the house. And that's the reality of long-term care, you know? It's
Yeah.
not something most of us really want to think about.
Right.
But today, we're going to dive deep into this topic with an article from the Squaw Financial Group.
Okay.
And this article breaks down like the big question. How do you plan for those potential costs?
Yeah.
Do you do it yourself, self-insure by investing, or do you opt for long-term care insurance?
It's really interesting because long-term care is way more common than I think most people think.
Right?
The article actually mentions a pretty startling statistic.
Okay.
7 out of 10 people over 65 will need some form of long-term care,
Wow.
which is a much higher chance than having like a serious car accident.
It's crazy, right? Like, we insure our cars without even thinking about it.
Yeah.
But then when it comes to, our own potential need for care years down the road, it's like, whatever.
Right.
We just hope for the best.
Yeah.
Right? So let's unpack this. Should you be, like, stashing away cash to cover these costs yourself?
Mm-hmm.
Or is insurance the smarter way to go?
That's the million-dollar question. Literally,
Yeah.
the article highlights that the median cost of a nursing home is over $9,700 a month.
Oh, wow.
And hold on to your hats because they're predicting these costs could double in the next 25 years.
Double. Okay, now we're talking serious money.
Yeah.
Have you ever, like, stopped to think about what that kind of financial hit could do to you or your family?
It's huge.
Like, this is not something we can just sweep under the rug.
No, absolutely. The article crunched some numbers and shows that the average nursing home stay could set you back nearly $1 million.
$1 million?
Yeah.
Wow.
So to kind of help us wrap our heads around these two main approaches, investing versus insuring, they introduce us to two hypothetical couples.
Okay, let's meet couple number one.
Okay.
The Millers. They're taking the self-insurance road. They're choosing to, like, invest a big chunk of change and watch it grow over time.
Right.
The article assumes they invest $200,000 and see a 7% annual return. After 25 years, they'd have a little over $1 million.
Mm-hmm.
Not too shabby. Well,
But on the surface, it seems like a pretty solid plan, but there's a catch.
Echo.
Even with that pretty decent return, their initial investment only grew about 5.5 times.
Okay.
Which brings up a crucial question. Is that really enough to cover potential long-term care costs?
Right.
Especially when you consider how much we expect those costs to go up.
Right. Yeah.
Yeah.
Okay, so let's move on to couplet number 2.
All right.
The Smiths.
Okay.
They decided to go with the, like, security of traditional long-term care insurance. Their policy includes a monthly benefit, covers a specific, duration of care, and requires them to pay premiums.
Right.
Pretty standard.
And here's where things get really interesting. The Smiths end up with over $3 million in coverage.
What? That's over 15 times what they put in through premiums.
That's right.
Wow.
Now, that's what I call leverage.
Wow. So in this scenario, insurance seems to, like, provide a much bigger safety net.
Definitely.
But the article also explores another option, which is a hybrid life and long-term care insurance policy.
Okay.
So it's kind of like a two birds, one stone kind of deal.
Yeah.
Combining life insurance with long-term care coverage.
This is where things get a little more complex.
Okay.
The article outlines 2 different scenarios for the Smiths with this type of policy, one with inflation protection and one without.
Okay.
So with inflation protection, the benefit actually increases over time, but there's a limit on how long you're covered.
Okay.
Without inflation protection, you have a fixed benefit, but the coverage lasts your whole life.
I see.
So it's a trade-off.
So more flexibility, but more decisions to make.
Exactly. And the possibility of what they call unlimited leverage with that lifetime coverage option is something to think about.
Right. Now, when it comes to this hybrid option, there's an interesting detail that the article mentions called shared care.
Oh, yeah.
Can you explain what that means?
Of course, shared care is a feature of some of these hybrid policies. That allows you to access a portion of that death benefit while you're still alive,
Okay.
specifically to cover long-term care expenses.
I see.
So let's say you need care before you pass away. You can tap into a percentage of that death benefit to help cover those costs,
Okay.
which can be a real game changer for folks who want to ensure their loved ones still get a death benefit,
Right.
but also have access to funds for their own care if they need it.
That makes a lot of sense. It sounds like it could provide some, like, much-needed peace of mind.
It does.
for both the policyholder and their beneficiary.
Exactly.
But I'm also wondering about like the tax implications
Yeah.
of these different long-term care funding approaches. Could you shed some light on that?
Yeah, you bet.
Yeah.
There can be some significant tax advantages to using certain long-term care funding
Yeah.
strategies. For instance, premiums paid for traditional long-term care insurance policies
Mm-hmm.
are often tax deductible up to certain limits,
Yeah.
and withdrawals from certain types of hybrid policies used to cover those qualified long-term care expenses. Maybe tax-free.
Wow.
It's a little nuanced, but the bottom line is that taxes really play a key role in the overall financial picture of long-term care planning.
Okay. So this is definitely an area where it's important to like get some expert advice from a qualified financial advisor.
Yes,
Right.
100%.
They can help you navigate those tax complexities and make sure you're taking advantage of any available deductions or exemptions.
Exactly.
Right.
Trying to figure all this out on your own can be a recipe for, well, headaches and some potentially really costly mistakes.
Yeah.
A good advisor can be your best friend when it comes to long-term care planning. They can help you make those informed decisions that align with your overall financial goals
Right.
and help you minimize that tax burden.
Speaking of making informed decisions, the article seems to come down pretty strongly on the side of insurance over self-insuring.
It does.
They even, like, compared to those must-have insurance policies we all have,
Yeah.
like car insurance and health insurance.
Yeah.
Like, it really makes you think, if we wouldn't dream of driving without car insurance
Right.
or, like, going to the doctor without health insurance, why would we take such a gamble with something as potentially expensive as long-term care?
That's a really great point. To understand why people often underinsure for long-term care, we can actually look at some behavioral economics concepts,
Interesting.
like loss aversion and present bias.
Okay.
So loss aversion basically means we feel the pain of a potential loss way more strongly
Yeah.
than the pleasure of a potential gain.
Oh, okay.
So we're more likely to try to avoid a loss, even if it means missing out on a bigger gain.
That's fascinating. So are you saying we're more afraid of paying insurance premiums than we are excited about the potential benefits of having that coverage?
Exactly. And present bias comes into play because we tend to prioritize that immediate gratification over long-term rewards.
Yeah.
So long-term care just seems so far off
Right.
that it's really easy to kind of push it to the back of our minds
Yeah.
and just focus on those more pressing financial needs.
So we're basically like kicking the can down the road and hoping for the best,
Basically, yeah,
which can be like a risky gamble.
it can.
Yeah. So while the article, leans heavily towards insurance, I'm guessing it's not a one-size-fits-all situation.
You're absolutely right. Everyone's financial situation is so unique.
Right.
What might be the perfect solution for the Millers and the Smiths in the article might not be the right fit for you.
Right.
It all comes down to your own personal risk tolerance, your long-term financial goals, and things like your age, your health status, and your family history.
So it's like a bit of a puzzle,
It is.
piecing together all these different factors to figure out the best approach.
Exactly. And that's where a qualified financial advisor can be so valuable.
Yeah.
They can help you put all the pieces together and create a plan that really meets your own unique needs.
It seems like there are like more options out there than most people realize.
There are.
You mentioned reverse mortgages and Medicaid planning.
Yeah.
Can you elaborate on those a bit?
Yeah, sure. Reverse mortgages allow homeowners to tap into their home equity
Right.
to cover various expenses, including long-term care.
Okay.
But it's super important to understand the terms and conditions because they can be pretty complex.
Okay.
So it's not a decision to make lightly.
Definitely not.
Right.
Yeah.
Now, as for Medicaid planning, that involves structuring your assets and income to actually qualify for Medicaid coverage,
Okay.
which can help to pay for long-term care.
Yeah.
This is generally a much more complex strategy.
Right.
And it often requires the help of an elder law attorney.
So if someone's considering either of those options,
Yeah.
It's crucial to seek expert advice.
Absolutely. Trying to navigate those strategies without professional guidance can lead to some serious financial and legal consequences.
Right. It sounds like it.
Yeah.
Okay. So it sounds like there's a lot to consider when it comes to long-term care planning.
It is.
Sounds like a lot to consider
It is.
when it comes to long-term care planning.
It is.
I mean, we've covered the potential costs, the pros and cons of investing versus insuring, different types of insurance policies, even alternative strategies like reverse mortgages and Medicaid planning.
Yeah.
It's definitely a lot to digest.
It is, and it's important to remember that this deep dive is just a starting point,
Right.
you know? Think of it as a springboard for your own exploration.
Okay.
Don't be afraid to, do your research, ask questions, and really dig into what's right for your unique situation.
Absolutely. Knowledge is power, especially when it comes to something as important as long-term care.
100%.
Speaking of knowledge, I'm curious about something you mentioned earlier.
Yeah.
You talked about how the article really advocates pretty strongly for insurance over self-insuring.
Yeah.
What are some of their main arguments for that stance?
Well, the article argues that insurance offers a level of financial protection and leverage that's just not achievable through self-insuring.
Right.
They highlight several key points, one being the potential for significant cost savings.
Okay.
With insurance, you're essentially pooling your risk with others,
Mm,
which means that even if you end up needing a lot of long-term care, you won't be solely responsible for, bearing that full financial burden.
that makes sense. It's kind of like how car insurance works, right?
Exactly.
You pay a relatively small premium each month, but if you get in an accident, the insurance company steps in to cover the potentially huge costs of repairs or medical bills.
Exactly. Insurance provides that safety net that can
Mhm.
protect you from financial ruin.
Wow.
The article also points out that long-term care insurance can help preserve your assets. So if you end up needing care and haven't planned ahead, you may be forced to, deplete your savings, sell your home, or even rely on family members for financial support.
Right.
Insurance can help prevent that from happening, allowing you to kind of maintain your financial independence and protect your legacy.
So it's not just about covering the costs of care.
No.
It's about protecting your overall financial well-being.
Exactly.
Yeah.
And another key argument the article makes is that insurance can provide peace of mind.
Okay.
Knowing you have a plan in place can alleviate a lot of stress and anxiety,
Right.
both for you and your loved ones. It allows you to, focus on enjoying your life rather than constantly worrying about those what-ifs of long-term care.
Yeah. That peace of mind is priceless, isn't it?
It is.
It's like having a superhero cape for your finances, shielding you from potential disaster.
I love that analogy.
Right.
It's so true. And that brings us back to a fundamental question. What is that peace of mind worth to you?
Mm.
How much would you be willing to pay to make sure that you and your family are protected?
That's a powerful question. It really makes you stop and think.
It does.
Because at the end of the day, it's not just about numbers and policies. It's about making sure that you can live your life to the fullest, knowing that you've taken steps to safeguard your future well-being.
Well said. And it's also important to acknowledge that long-term care planning can be like an emotionally charged topic.
Right.
It forces us to kind of confront our own mortality and consider the possibility of needing help with basic tasks.
Yeah, it's definitely not the most fun thing to think about.
No,
But I think it's crucial to approach this with a sense of empowerment.
I agree.
The more we understand about long-term care planning, the better equipped we'll be to make decisions that align with our values and goals.
Absolutely. And remember, you don't have to navigate this journey alone.
Right?
Reach out to a financial advisor you trust.
Mm-hmm.
They can be your guide, your advocate, your partner in creating a plan that gives you confidence and security for years to come.
That's such an important reminder. Talking to a financial advisor can help you sort through all the complexities
Can.
and make sure you're making the best choices for your specific situation.
Yeah.
We've covered a lot of ground in this deep dive, but I think one of the most valuable takeaways is the importance of simply having the conversation,
Yes.
whether it's with a financial advisor, your family, or even just yourself.
Right.
Acknowledging the potential need for long-term care and starting to think about your options is a huge step in the right direction.
I couldn't agree more. It's about taking control of your future and making sure you have the resources and support you need to live a fulfilling life no matter what challenges come your way.
And on that note, I think it's time for us to wrap things up for today. This has been a fascinating and informative deep dive into the world of long-term care planning.
It has.
But before we sign off,
Yeah.
I want to leave our listeners with one final thought to ponder. Imagine yourself 20 years from now. What steps can you take today to ensure that your future self will thank you for the decisions you made?
That's a great question to leave everyone with.
Right.
It encourages us to think long-term and consider the potential consequences of our actions or inaction.
Right.
We hope this conversation has been helpful in starting that thought process.
Yeah.
And remember, it's never too early to start thinking about these things.
Right.
The sooner you do, the more options you'll have and the more peace of mind you'll enjoy.
Wow, yeah. That is a powerful question to think about. What can we do today to make sure our future selves will thank us? It really highlights how important it is to be proactive about this stuff,
Yeah.
taking control or long-term care planning.
Absolutely. And it's so easy to put these decisions off, but procrastination can really come back to bite you later.
Yeah.
The more time you have to plan, the more options you'll have. And you'll be much better prepared to handle whatever comes up.
It's like that old saying, the best time to plant a tree was 20 years ago. The second best time is today.
Exactly. We can't change the past, but we can definitely do things to shape our future.
So true. And, it's worth pointing out that long-term care planning isn't just about protecting ourselves.
Right.
It's about our loved ones, too.
100%. Think about the burden it would place on your family. If you needed a lot of care and hadn't made any financial arrangements, they might have to give up their own financial security to cover your costs.
Yeah, that's a tough thing to think about.
It is, and it's something that can be avoided with a little planning.
Absolutely.
Long-term care insurance or other planning strategies can act as a real safety net,
Right.
not just for you, but for your whole family.
It's like giving your loved ones a gift
It is.
of peace of mind,
It is.
knowing that you've taken steps to protect them from hardship.
That's a great way to put it. It's a
Yeah.
gift that keeps on giving.
So as we wrap up this deep dive,
Yeah.
I want to encourage everyone listening to take that first step.
Yeah.
Start the conversation, do your research, reach out to a financial advisor.
Yeah. And remember, there's no one-size-fits-all answer here. The best approach for you is going to depend on your own unique circumstances.
Right.
And a qualified financial advisor can help you tailor a plan that really meets your needs and goals.
This deep dive has been so informative. I think we've all learned a lot.
Yeah.
And I hope it's given everyone listening the information they need to take control of their long-term care planning.
Me too. And remember, knowledge is power. The more you know about your options, the better decisions you can make. And that benefits you and your loved ones for years to come.
Couldn't have said it better myself.
Yeah.
And on that note, we'd like to thank everyone for joining us on this deep dive into long-term care planning.
Until next time, keep learning, keep exploring, and keep diving deep.